new record highs today. In fact, it's a pretty good session for everything but tech and comm services. Discretionary is modestly negative, but I thought we would start, Josh, with what I feel is the market's role reversal, if you want to call it that. The top three performing sectors in April and May were in the bottom four in June. So the market sort of turned itself on its head. April and May, tech was up 42%, comm services up 22.5%, discretionary up 18.5%. Now, over the last month, for all intents and purposes, you've got June, tech down 3.5%, discretionary down 5%, and comm services down 8%. Is this a tell of what's to come?
I think you couldn't ask for a better setup to go into the second half than having sort of a catch-up trade in certain areas, having some of the worst performing areas catch a bid, like software. I know we'll talk about that in a few minutes, and having a little bit of a breather in some of the momentum stocks within tech that have gotten us this far. I can't imagine what you would prefer if you wanted to be constructive on the second half. What could possibly be better than having this intra-market rotation keep us within 2% of all-time record highs, and really give us a backdrop where people are finding success in every sector, finding stocks that are working, or finding opportunities in stocks that aren't working, and being rewarded for that. I think it's a great tape. It's one of the better tapes that we've seen over the last few years. The contra to something like this, I think, would be worse, where we have another month where Micron puts on 25%, because why not? And we have all of the data center component suppliers continue to double and triple, and we have the rest of the market fading away as everybody chases the same 20 stocks. That would not be preferable. That's the converse of what we're seeing today, and I like it.
Because that was the criticism of the move before, is that it was, so centered around all of the places that Josh just said. And now you literally have a bit of a reversal from that. This is exactly what the doctor ordered. If you're bullish this market, isn't it?
For sure. I love a broad-based rally and a broad-based market in general. It's healthy for tech to take a breather and comm services to take a breather. It's not normal for a sector to be up 42% in the first 6 months of the year. We'll take it. The growth is there. The earnings revisions are there. Fine. But I think the economy is growing above trend. It is driven by the consumer. It is driven by AI. It is driven by loan growth. H8 data last week up 8% for loan growth. They're at the front line of this economy, and 8% growth is the best in 3 years. So I think you're going to see a broad-based earnings results across every sector, and the valuations in industrials, in financials, especially in discretionary, are very attractive. And I think those are sectors that lead into the end of the year.
Well, I mean, industrials have been consistently strong.
Certain ones.
Yeah, but I mean, as a sector
For
group. Sure. They were good in April and May, up 10.5%, and then they didn't wane really at all in June, up 7%.
Yeah.
And then obviously a lot of that's AI build out. I think we get it. Thank you, Caterpillar, and many of the other names too.
But
right, sure. But
and Quanta Services.
The airlines are in that.
The airlines, yes.
But I think like the rails are interesting to me, or the logistics companies. They're on my radar screen to potentially add to. I really like this FedEx spin too.
What do you think about the changing makeup, if you want to call it that?
Yeah, I think you guys better curb your enthusiasm on this rotation that we're talking about.
Why?
Let's see how much longer it lasts. So I'm not as willing to say that folks have found their religion around chasing the things that have been working and allowing them to continue to go up for the sake of they've been going up. When you look at things like the SOX-L, the 3X Bull ETF on the PHLX and the SOX, right? The semis are now being traded because the mechanisms used to trade them are going up, so the stocks have to go up. The Kospi is another good example of this. The semis are really what has gotten out of control in the last few months. If you just look since March, I guess, that index is up 700 700%, or that ETF is up 700% in 3 months, that to me says that the irrational exuberance hasn't completely gone away. I'm glad to see things like financials and real estate.
Definitely moderating, though, isn't it? I mean, when you look at
the moment, that's why I say it's not been long enough for me to say that this is investors finding their religion around what makes sense here. I think that realistically, we have to give it another couple weeks at least as we get into earnings. We're going to get earnings from the big tech companies in a couple of weeks. It starts at least, and that's really going to set the stage for whether we're focusing on earnings like we should be as disciplined investors, or if things are continuing to go up because they've been going up.
But don't we know that these areas other than tech are the earnings estimates for them are all rising as well? No one's suggesting that you're all of a sudden going to get another sector group that's up 50% in terms of their earnings growth. But if you're getting what was low double digits up to high double, around, even maybe 20+% in some of these lagging areas of the market, isn't that the support that would justify what we're already seeing and trying to get ahead of in some respects over the last month?
Yes, except what you're referring to as the laggards is the mags, right? So those are the companies that to this point haven't quite participated the way we would have wanted to see them, and maybe for good reason. When you look at an Oracle in the financial report that just came out and them sort of walking back all the reasons that their build out might not work. When you look at OpenAI potentially shelving its IPO, at least in the back half of this year, maybe those spending commitments that the mags have been built on all this time start to unwind a little bit. So I'm just saying that it doesn't necessarily guarantee that investors have found their religion because we've seen a couple of really solid days of rotation.
Well, I mean, it's been a month.
Sure.
Let's be honest. It's more than a couple days.
Sure.
2 more weeks is going to make a decision for you?
I think getting into earnings and seeing how the market responds to the earnings of companies that actually have a legitimate business rather than the ones that are coming based on promises and coming based on here's what we know we can do by 2030. Those are the kinds of companies that the rally has really been pushed by. Micron is a great example of what I'm talking about. We keep hearing the conversation about their valuation being so offsides compared to their revenues. Yes, they could grow into that valuation, but realistically, can they build enough to actually meet this demand before it disappears? I don't know that that's possible.
What do you think?
So I don't think it has to be an either-or story. And I didn't interpret your question when you were talking about the hyper-concentration to be comparative to the Mag 7 like Malcolm was answering. I think it's that broader picture. And what's very encouraging is we're seeing, and it started already, industrials, healthcare, financials. If those can broaden out, and I think they're sort of quasi-AI adjacent. Obviously, industrials are, and we hit on why. But when we're coming off of a 6-month period where that concentration, I don't remember a time when we've seen just a small handful of stocks fueling it to the degree that we did.
We probably never have.
I couldn't think of
Not to the degree. When you put that on there, not to the degree we saw, I don't think we ever had.
Not with that concentration. 1999 was somewhat reminiscent, but it stayed concentrated. 2023 was a Mag 7 trade, but that was coming off of like this massive sell-off in 2022. 25 wasn't a bad year. 26 is like a handful of stocks. So if we get the breadth that I think we're all hoping for, and I'm expecting, I believe that that's the story for the second half of the year. I think it's really healthy for the bull market to continue. Because to your point, Malcolm, you don't want it to be a handful of stocks. But I think you want to see more than just the Mag 7 participating, and I think we will.